Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Interest rates in the US took a little bit of a spike overnight with a 10-year touching around 308. That's the highest level since 2011. Also seeing a little bit of a spike as well in the sort of 2-year rates. That all sort of, just points to sort of gradually higher rates coming through in the US, and that's obviously going to filter through into the rest of the global interest rate markets. Certainly interest rates do look to be on an upward path. Fed fund futures in the US also pricing in pretty much 100% probability of a rate hike in June. It's then looking at a further rate hike in September. Jury's then probably out to see if you get a further one in December, but certainly the way the markets are trading at the moment, it would imply that we're still looking for 3 more rate hikes from the US. Against the backdrop of a US economy that's still continuing to perform very well, and that's certainly the case. Certainly the data is still pretty strong. Earnings have been pretty good, but maybe some of the expectations were maybe a little bit sort of too high. You've got companies beating their sort of estimates, but maybe not coming in right at the top end of the ranges, and that's seen stocks come off a little bit. But overall, in the last sort of 10 trading days, we've seen up days of around 8, which is pretty positive. Obviously, geopolitical pressures rising again, certainly in the Middle East. The US potentially sort of stoking a bit of a fire out there with the opening of their new embassy. But it's just going to be interesting to see, one, how that sort of plays through, and then secondly, obviously, how the sort of Korean summit sort of moves forward. Certainly, again, a lot of gesturing out there, a lot of goodwill, a lot of movements coming through in terms of the release of the 3 hostages, US hostages last week. But it's still yet to get to that sort of June date in Singapore with the meeting between the US and North Korea. Oil still holding up pretty well despite the geopolitical pressures. WTI is above 70, and as I say, going to be interesting to see how that sort of trades through over the next sort of 2 to 3 weeks, given the increase in tensions out there and potentially the Iran situation as well, and the implications for that on the oil price. Brexit continues to rumble along, and a bit of a talk now that the EU might just look to sort of extend the period now by about 6 months, just to allow everything to go through. That's come from the EU, not from the UK, so that's sort of, again, quite an interesting development, and would appear to imply that certainly the EU want to get everything sort of nailed down and in place before they pull the trigger and formally get the UK out of the EU. Here in New Zealand, obviously all eyes on the budget on Thursday. It's just going to be very interesting to see how that sort of plays through. Certainly the new government now sort of 9 months into its reign, potentially coming under just a little bit of pressure. Some of these sort of election promises are sort of being wound back or just gradually moved to the back burner. And it's just going to be interesting to see how this sort of plays through. You would expect spending to come through on education and on health. But there's probably not a whole lot out there to sort of give away. Certainly the books are a little bit better positioned than they first thought. But maybe 12 months down the road, that might not be the case. Obviously got the issues as well in the dairy sector with the mycoplasma. That's just going to be interesting to see how that sort of plays through. At the present now, it looks like eradication is out of the question, and it's just a question of containment. But overall, New Zealand market trades pretty well. Interest rates still look to be on hold for considerable time. And again, it's just going to be interesting to see the potential sort of giveaways in the budget, see what that does to a sort of GDP, and then obviously potentially the sort of housing market and how that will impact on interest rates. As discussed before, very good time. Just check those KiwiSaver balances. Make sure you're on track to get that maximum tax credit. If you're unsure on what that is, call us on 0800 867 323. Now, if you're looking for income options, there's plenty of options out there. Give us a call on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.